Good morning, everybody. Happy Hump Day. Welcome to the live stream. My name is Jacob Gabbard from Invest with Jacob. And today we are going to be live trading, day trading, and you're going to see the live action of our two indicators that we have. On the left side of the screen is Squeeze Sniper. And for those of you that already have it, we are going to be demonstrating what will likely be the updated version. We are always looking to improve and update, and we're adding what we call aggressive mode. And aggressive mode gives us a lot more trades and keeps the same winning percentage, but also gives us better overall value. So you get more action. Little slightly less. We were about 65% on the other one. We're just under 60% here, but we have a 172 net points, which is very good. And we are doing really, really well with this. We are looking to put it in production pretty soon. I need to use this version today so I can look for bugs or any issues. So if we do face bugs, just know that this is not a production version yet, but should be very soon. So we're going to be demonstrating that today. And we are going to be demonstrating our Pivot Point Pro, which is our original indicator, which has done incredibly well. Over the last few days, we have done really well. And over the last 2 years, we're up over $100,000 on a $100,000 account, trading with very, very good discipline and just takes emotion out of trading. The difference between the two is Pivot Point Pro is looking for reversals in the market. So it's looking for tops and bottoms. It can short and long. Whereas as of right now, Squeeze Sniper is simply looking for squeezes on the long side. And they don't necessarily come from bottoms. They can come from, wherever the setup occurs. So you get a lot more trades on Squeeze Sniper. Out of 127 here, we are 74 and 53 for 72 points on the ES. On the NASDAQ, we can go over there and look at the futures real quick. I believe we're like 66% on the NASDAQ. It's a better, more accurate as far as winning percentage on the NASDAQ. 1 second here, it's updating. It's a big script. It takes a minute to update. There you go. So we're 67% on the NASDAQ, 223 and 110 for 450 points over on the NASDAQ. Now, this is over a 3-week running period. So this always changes. So next Wednesday, you'll see a different number of trades, a different winning percentage, a different net points because the trading view, depending on which plan you have, only gives you so much data. We're on the 1-minute chart. So we can only go back as far as the 1-minute chart goes. Now, to be clear, we're not trading the 1-minute chart. We are trading hourly and daily setups, but we are doing so on the 1-minute chart to get the entry as accurate as possible. So if you have to wait till a 5-minute bar closes for your entry price, you're going to be further behind than a 1-minute bar. So as we go back here, hold on. So this only goes back to June 29th because that's as far back as TradingView will give us. So the 29th to the 22nd is about 3 weeks, and that's what you're seeing here. So over the last 3 weeks, we've had 127 trades on the ES for 172 points, which again at $50 a point is like $8,500, right? And on the NASDAQ, it was 400 points at $20 a point, so that's about $8,000 or $9,000. So if you're trading full. If you're trading the minis, obviously it's 10% of that, but at any rate, that's a 3-week time period. So if you extrapolate that out by 1.25% to make a full month, you can see what kind of numbers you'd get. Or divide it by 3 and multiply by 4, however you want to do it. Anyway, that's what we are demonstrating today. So Squeeze Sniper looking for squeezes, and we're not necessarily looking for 20, 30, 40 point squeezes, which do happen. We're looking for 5 to 10 to 15 to 20 point squeezes on the ES and 15 to 50 point squeezes on the NASDAQ, just depending on what you get. So this would be running in what we call aggressive mode, meaning that some of the filters are off, such as the 2 stop. So on the original version, if you had 2 losers in a day, we stopped trading for that day so as to cut down on the mental anguish as well as some setup issues. But we found that with a couple of tweaks, we were able to make that a profitable thing. So we are running this now in aggressive mode. Again, this is not production. This is not what you have if you have futures Squeeze Sniper. So this is to demonstrate it as well as to check for any bugs. I need to see it in a live environment for as much time as possible. So I want this version up to make sure we don't have any bugs. Now I'm going to take this off the screen because it's a big mess, but I wanted you guys to see that up front and see what it looked like. So let me go down here and take the trade log off. Trade log, where is show trade log? I'm too deep, I think. Show trade log right there. Too many boxes on here. And that will go away here shortly. So that is Futures Sniper. Over here on the left, we have Pivot Point Pro. Some caveats on Pivot Point Pro. We don't trade the after hours stuff. So this yellow here, we don't trade. What it's looking for is it's looking for universal buy and sell across the SPY, the ES, and the NQ for those products. And then it's looking for certain setups on, say, NVIDIA or Meta or whatever else. You can use it on anything. It does really, really well on all products. We only trade it the first part of the day because day trading you want to get done between 9:30 and noon. In my opinion, 9:30 and 11 is probably even better. But 9:30 and noon is where most of the major moves of the day are going to happen. Then the market kind of settles into what it's going to do. Yesterday we had this sell that was really nice, a good winner. We actually had one sell that came in and lost. So because of how it works, you can get a signal that as soon as conditions are met, the signal appears. But they have to stay for that 5-minute bar to close. Now we do enter as soon as we see it. So when the sell signal appears, we enter. It can go away, and it actually did on this bar. It went away once. We got stopped out on this spike up, and then it came back down and gave us the sell signal again, and we got in. So we had a loser and a winner yesterday. And then skip the overnights. We had this really, really good sell here. This was a monster. And then just after 12 o'clock, so we didn't get this trade, but another monster sell and then a buy. You can see it does find the tops and bottoms really well, but it's more accurate in the first part of the day. So the last couple of days, really good. We'll see if we can break the Wednesday curse. Wednesdays have been either no trades or bad trades. So we're going to break the Wednesday curse today. But like I said, over the last 2 years, Pivot Point Pro here has returned based on a $100,000 contract. We started off trading 25 contracts per trade. And then after a year of demonstrating it was profitable with our strategy, and not just profitable, like 40, 60% profitable, we switched to 50 contracts because we built our capital up to be able to support that. And we've turned 100K into over 200K in just over 2 years. So really, really all documented, not even by me, by one of my users who pays to be a member, but also tracks all of our trades to kind of make sure all the checks and balances are there. So that's all verified and tracked as well. So before the market opens, which is about 15 minutes, let's jump into the charts and see what we're looking like here. So yesterday, I mentioned in my closing call, which by the way, guys, I do that every day at 3:55 p.m. live on YouTube. You can come check that out as well. I mentioned in my closing call that the structure to the upside was not great, and I was expecting downside still to come. Can it go directly higher from here? Of course, the market can do what it wants. However, probabilistically, and on the side of probability, the structure that was built off of this low is very corrective and overlapping, and more often than not, that leads to a lower low. And our primary count here is that we're playing out a triangle where this is A, B, C, D, and then E would come down to about the 74.50, 74.60 area, spike this low a little bit, and then we'd look for it to break out to the upside. It is a pretty ugly overall pattern. The bullish pattern fell apart, so on this move down. So we are not looking necessarily for a direct move higher from here. Now, the interesting thing is, last week I said they'd probably take out this low, and they made an exactly equal low. So off of this low, it was doing okay, but then it kind of fell apart overnight. And really, the NQ is what fell apart from the start. The NQ did not have a great structure. Can they go directly higher and the triangle be done from here? The answer to that, of course, is yes, like I said. But we're not. I would rather see a lower low come down, hit the 618 area, and then go from there. And I would like to see them do it as soon as today or tomorrow if they're going to be bullish. We're not long or anything right now. We're all cash, but I would like to see them do it sooner than later if they're going to be bullish, because seasonality tells us that as July gets later in the month, which we're on the back third of it here, the market starts to weaken, and then in August it weakens more, and September and October are usually pretty bad. 2022 was a midterm election year, and midterm election years tend to be bad. 2018, also a midterm election year. We saw how bad 2018 was. So those midterm election years seasonally tend to start to weaken right about now. So if they're going to be bullish, they kind of have to do it. And it makes sense. This would be a wave 5 topping. No matter how it does, this would be 5, and this would be a little weak 4-5, even though I don't love this as a 4-5. That's how it would translate. And, if they do go directly higher, then they make a 5 and turn down later in the year. The path lower starts with a breakdown, obviously, of 74.22. If they get through 74.22, they're likely to at least test 73.57, but I would say more likely they come down to 72.50 to this, or to 7,200 or 71.90 or so. This consolidation on the way up, it's really the only place the market consolidated on the way up after it broke out. So you had this little consolidation down here, and then it broke out, a little consolidation here, and that was it. It was all up from there. So there's not a whole lot of support. It's trying to build support now. Toward the top, so it's building a structure here, but it didn't build any on the way up. So this area is very important to the market in its current short-term bullish structure. Now, longer term, there's bigger, better supports, but in the short term, this area right here is very important. If they get through that, it's kind of a free fall. So that's what we're looking at. We're looking for the triangle to play out. Again, can it play out from the low yesterday? Yes. Would that be the most natural thing? No, and I'm more of a purist, so I want to see a low. But you also have to take what the charts are giving you. We don't trade based on our opinion. We don't trade based on an opinion. We start with an idea or an opinion, but I always have an idea in both directions. I have a short idea and I have a long idea, because I want to know when the market changes, where it changes, what the key levels are, and what I'm looking for. And then once one of those ideas start to materialize, if it gives us the structure for a trade, then we look for that. And then if it gives us the setup, we take the setup and then we trade. So my opinion is irrelevant, but my key levels are not. The key levels are the key levels. And so whichever way it goes, I'm looking for a key level to break, a setup to occur, and a trade to be placed. Many people get mad because I give an up and a down direction because they're so concerned about being right about what the market's going to do. Doesn't matter. I don't care what the market does, and I don't care about being right about it as far as what my opinion on what's going to happen in the next week. I care about knowing how it's going to happen so that when the setup occurs, I can trade it. And that's a really big difference between being right and understanding trading. I don't care about being right until I'm ready to place a trade. And then I really don't care about being right. I care about being on the right side of the probabilities, because you're going to be wrong in a lot of trades. But if you're on the right side of probability, you will be right over time, and you will be right in the checkbook or the pocketbook or your bank account, and that's where it matters. That's where it matters to be right. Being right about what the chart does is cool. I mean, good job, I guess. If you didn't translate that into money, then it doesn't matter. It is simply you having an ego and wanting to spout off about it. I could care less what the market does or if I'm right or wrong about what it does. I do care about getting in trades and making sure that they're profitable and on the right side of the profitability spectrum. And a great deal of our trades, hit at least our first profit target where we can take our 20% off as our buffer. And then maybe they fail after that, but we're generally in the right direction to start. And then if the market fails to follow through, it fails to follow through. So those are really key things that you can learn in my room about how we trade and why, and how being right about the market is an overrated thing, because if you're not right about the trade, then it doesn't matter if you're right about the market. So if you'd like to join my room, you can go to investwithjacob.com. You get a 1-week free trial to check it out. No risk involved whatsoever. You can cancel if it's not for you. You can watch our trades. You don't even have to take the trades. Just watch them and see how they play out. And if we are terrible at it, then obviously you can move on. But I have a lot of people in my room, so obviously we're not too bad at it. And again, everything's documented. You can come in and look at all of our past trades and everything. So, it's a lot of fun in there. But that's what we're looking at on the ES. We'll go over to the NASDAQ real quick. NASDAQ is a much different story. So the NASDAQ actually broke the structural low here. They recovered it really quickly. They ran a failed breakdown of this level, ran a 900-point trap back to the 8 exponential moving average. And if you don't know what these are, they're very important. The blue line and the red line are the two most important. They are your momentum and trend dictators. And you'll see price come to them and act on them exclusively. So, and they never get that far away from them. So they broke down. They flipped. So when the 8 is above the blue, so when the 8 is above the 21, that means momentum is up and trend is up. When the 8 is below the 21, momentum is down and trend is down. Now, does that mean they can't go higher? Of course not. They have to reverse the trend at some point, just like they went lower here and reversed the trend. So right now, the trend is dictated as down. They came back to the 8, hit it, closed on it, and then rejected it. If you look on the way up, they just ride the 8. They ride the momentum train all the way up. Every time it comes back to the 8, it bounces, bounces, bounces until the momentum dies. And when it dies, generally, you're going to at least test the trend. And then they may try to get the trend back, which they did. They failed to make a new high, so the trend switches. They overlap, or they cross over, and we have a new trend on the daily chart. So these two numbers are really important. You can see the 8 is really important. If it's a strong up move, it's going to stay above the 8, and it's going to check in with the 8 every so often. So it checked in with the 8 on the 26th. It checked in with the 8 on the 8th, then on the 13th. Then again, it was close on the 23rd, back again on the 29th, back again on the May 8th, back again on May 12th, back again on the 15th and got below it, came back up, checked in again on the 28th, and so on. So you can see that in strong momentum plays, and this is a warning, by the way, it got below the 8 and recaptured it, but it's saying sellers are trying, and it did have enough steam to go higher, but then the next time it got back to the 8, it failed it. So when they get below it, pay attention. That's usually a warning sign that you may want to start taking profit if you got in down here or something. So NASDAQ broke the low here. It came to the top of our box. 28.4 was the minimum target. They came right into it and bounced away from it. Now this structure is really ugly. So I would suspect they need to spike this low. If they're going to be bullish, spike this low into this box and then back higher if they're going to be bullish. If they're going to be bearish, I still suspect they're going to break this low, but they may bounce a little more first. So you may get something like this, and then down that's going to come strongly through this box, because in that case, you'd be starting to build this A, B, C for A. And you have this C wave that's a diagonal down. It's really ugly. So so this A wave would conclude on a C wave diagonal, which means they're likely to buy strongly back up into this zone here. And then you'd see the C wave down that would come down through this box. And, just depending on structure and everything, how deep it goes will be dependent on fibs and that kind of stuff. So a very ugly structure so far on NASDAQ off of the low. They can sweep this low and regain it and still make a new high. But NASDAQ much weaker in general than the ES. as far as structurally. I wonder how Sniper would do in a prop firm challenge. I use it all the time in my prop firm. I have prop accounts with Take Profit Trader, and it does well. Good morning, Jacob. What is your thoughts about the fact that D went higher than wave B on SPX? Does that invalidate the triangle for SPX? On SPX, a totally different chart, totally different things. So even though it is a cash value of the futures, you treat it very differently. So we can look on SPX at the chart. You're saying this went higher? Yeah, it did. So let's look at the fibs here for just to see. In theory, as long as the SPX holds this low, it's okay. It's not great. It's not what I would love, but you have what we can call nested 1-2s here. So you have 1, 2, and I'd have to look at this to make sure it's a valid structure. But since the ES was on that particular move, I would say it's probably okay. Not making a lower low here is a little odd, and it may be more Nasdaq. Like I don't know. I'd have to dig into this one on a smaller time frame, but we don't really have time for that. But you do have a 1, 2, 1, 2, 1, 2, as long as they hold this low, and this 1, 2 is the 1, 2 of 3 of 3. It gets very convoluted now. So this is 1 and 2 of 3 of 3, and then you'd have 4 of 3 of 3, 5 of 3 of 3, and that would be all of 3 of 3. Then you would have 4 of 3, 5 of 3. So it gets a little convoluted, but it can work. It's just not ideal. Typically, you don't see this deep of a pullback, but it's not the end of the world. Okay, we're about to open here, so I got to make sure we're all set up. Let me see. Do we have a trade potential? We do. We have a potential for a short coming in. Not like right this second, but when they do start to go down, we can see a short trade. Let me get out of. Oh, let me get out of here. Go over to our chart here. Let's spread this out so we can see it. We just had a winner on the ES, by the way. So one of the things you're going to see today in aggressive mode is that full profit is taken at take profit 1 because we are aggressively trading. A lot of the runners, that was one of the tweaks we made. A lot of the runners don't run out. We don't get to take profit 2 in runners, but if we take the profit at take profit 1, it gives us a lot of winners. So that was one tweak. So we take 100% at take profit 1. You're going to see a take profit dupe bubble come up, but it'll still say 0 here, just so you know. Now we may get a sell at the open, so I got to get to step in here, guys. 1 second. Very often the open can move quickly, so we got to be ready. Today is the 22nd of July. Going to be on a 746 strike, it looks like. Looking for a put. Now they are aggressively pushing here, so they're going to have to turn down at the open, and if they do, then we'll start to look for a short. But if they don't, then up, and away potentially. We'll see. All right. Also, the volume gets heavy at the open, so it can be a very quick reversal. So just be ready for that potential to happen, especially if they get up to the pre-market high up at 747 and change. Let's see here. Here you can see we hit the take profit 2. However, 0 points were realized. So it was a total of 11 points, but none were realized because we took all of our profit here. So just so you know, you'll see that bubble. By the way, watch for this trade coming in. Let's see if we get it. ADD positive 350 right now, roughly 340. So it is positive. Vold slightly positive. Mostly red on the charts though. The Dow is, well, the Dow's red, but the Dow ETF is slightly green. Netflix, look at you bouncing, you little guys. Let me make these bubbles a little bigger. I think I can do that real quick. As long as they don't. This red line is your stop, by the way. So as soon as it hits take profit 2, the stop moves up to break even. 75.20 was your entry. As this moves up, this line will move up. Now, again, in aggressive mode, this line is simply for the trade understanding where it resets itself. In other words, one needs to know it's still in a trade, even though profit was taken at take profit 1, because if it doesn't come back and hit the stop, any trade set up here fails very often. You've already hit the main targets you're looking for, and so now you're kind of trading. You're chasing at that point. So we want it to reset, stop itself out, and pull back at least to the minimum amount of supports broken before we see a new trade. So it's got to come back and hit this line before a new trade can occur. So that's why that red line. You can see as price moves up, this line moves up. So now it's moved up to the take profit 1 at 75.25. Eventually, if it moves up again, if price continues on, it'll move up to the take profit 2. In normal mode and in the production value, you can change this. So you don't have to take 100% at take profit 1. You can update your indicator to say take 50 here and 50 here, 75 here and 25 here, or the standard version, the non-aggressive version, has 75 here, 15 here, and then 10% on the runner. And that allows you to have action if price continues to go up. You don't feel like you missed out on all of this trade. Now, again, in aggressive mode, we don't hit a lot of these runners. In fact, you miss a lot of them and you lose a lot of money because of it. So we found that taking profit at take profit 1 is a much more profitable way to do it. So we've been doing that. If you're super aggressive, you can go take all your profit at take profit 2. You're going to have a lot more variance. In other words, your 58% or 67% winning percentages may go down by as much as 7-8%, but you may have a little more gains. So it just depends on your risk tolerance and variance on how you want to do that. But you can adjust these to anything you want them to be. And welcome to the stream, Interwave Flow. Welcome to the stream, Yellow Giraffes. Are there another color of giraffes? Are there like blue giraffes? I don't know. I don't think so. I think they're all yellow. Good morning. Happy hump day to you, Band Hunter, JD. Robert Leffley, would you consider the price action on ES distribution for a move lower? Potentially, yes. A standard Wyckoff distribution is going to have a little bit of what we're seeing. We would have rather like to have seen a high. So you would have a high, a fairly good pullback, and then a nominal high, another sharp pullback, and then something like this that kind of creates a head and shoulders or a nominal high, one or the other. And then you would look for this. And then once it breaks this kind of level here, it's what happened in Bitcoin. We talked about Bitcoin all the way back in October, if they broke down below 100K, they were going to 55K, and they went to 58. So far they've bounced there. We'll see if they sweep that low or not. But we talked about that in Bitcoin. There's a small gap here. I hate that if we get a short. They will fill this gap. Hopefully they fill it before we get a short. But it's a possibility that they're building a distribution pattern for sure. We're looking for a major top in the market, a major top. Will it happen right now this year? Possibly. We're closer than we are further away from it. So any top should be looked at with a little bit of caution. It's the reason we moved out of the S&P and into gold a couple years ago, because The S&P's risk factor was going through the roof and still is. Um, we have been out of gold for a while. We're mostly cash now, or at least I am. That's how I guided my people. They can do whatever they want. I have 10% left in gold and about 15% in the SPY, and then 75% in cash right now. I like to be a little more on the Warren Buffett side of things. If people say, "Oh, you missed this last move up in the SPY," well, no, I have 15% in, and I'm very confident that the next drop will be vicious, significant drop, I should say. And I'm very confident I will find better buying opportunities than 8,000 or even 7,000. Ponzi Zombie Killer, what's up, man? Welcome to the stream. Looky out below, folks. Could be. This could be a gap fill and drop. We'll see. But they could rip it. I mean, obviously, we don't know what they're going to do. We only know that structure is not great to the upside on either chart. I will say 75.33 is a very major resistance level for the ES. I can show you on the 5-minute and hourly chart that they interact with that level quite a bit, and 73.50 would be the next one. Those are two major resistance zones that they have not been able to break free of. So we'll see how they react to it today. They've interacted with this zone quite a bit. It's the lower end of the pivot area, 75.55 being the upper end of the pivot area. Hi, Jacob. Is the armed alert working? No, not right this minute. It was giving too many, not false reads. They were accurate reads, but there were just too many of them. So we were is not giving you armed alerts at the moment. That is one thing you will get. This version is giving armed alerts that we like. I don't have it turned on for the ES. I have it turned on for the NASDAQ, but it will give you, because I use the NASDAQ more, it will give you armed alerts in this version, which I hope to put out this weekend. Ajay, perhaps they're orange, yeah, instead of yellow. That could be true. I guess with the black in there, and depending on how the sun hits them and stuff, it can be different colors. BattleBot, welcome to the stream. Hi, Jacob. Any way to make the sniper indicator into a strategy so we can auto trade it? I'm a member and can help if needed. I can DM you in Discord. So the answer for me on that is probably, but I won't do it. And the reason I won't do it is because there becomes a lot of liability when you put out something that will auto trade itself, of whatever happening, stops not hitting, algorithms or computers messing up, freezing, accounts locking, whatever. There's a lot of things that can happen. And if you do it on your own, no problem. But I personally will not create an auto trading indicator. I've already found that TradingView has its long list of pains that are hard to deal with already, and I don't need something out there that is trying to auto trade into a. As far as indicators go, TradingView is a great product. I love TradingView as far as charting personally. However, the Pine script is rough. ADD is dropping, so that's something to keep an eye on. It went from positive 400 something down to 250. Now it's climbed back to 287, but red overall here for the first 15 minutes. Makes sense. Would love to talk or take the theories and make them into a Python script. Yeah, that's one of the big issue. Python is so much better at creating the levels and understanding what we're looking at than Pine is. If you run our I started this in Python, and if you run it through Python, the results are significantly better. The problem is once you transfer it into a Pine script, because of the limitations of TradingView, the results diminish some. If you've never worked with Pine script, imagine working with like basic programming language instead of say Python. If you're not a programmer, you might not know any of that, but remember the old programming language where you had to write like 10 C20 or 20 C10, and then 30 was whatever, and you could make like a rainbow on your chart on your computer screen. It is a little archaic. Some consolidation up here in the 1 minute chart, the 5 minute also consolidating for a couple bars here right around that resistance zone. I said 75.33 area is very much resistance, and we're seeing that here as the ES fights it. Looking for a little bit of rejection, potentially a short entry here. Again, I have 740. I have 746. I don't think we'll get 747, but if they start to weaken up here, I may adjust that, or if they go higher. Transports have turned green. Banks are flat. SMH down only 3 points. So not anything crazy on the SMH. It's down about 0.5%. It usually, if it's a bad day, it's going to be down, 2% or more. If it's a big green day, it'll go up 2% or more. SMH is the backbone of the market right now as far as who's pushing the market around. But what you're seeing a lot of, and why we're seeing a lot of chop specifically right now, is on SMH green days, you're seeing a lot of weakness in the Mag 7. And so that's a lot of weight against semiconductors. So you're seeing, kind of tempered moves higher. And on SMH red days, when you see that weakness in the Mag 7, you're seeing stronger sell offs. So when they're not in alignment, which you can see right now, they're in alignment, and we're down on the NQ for the most part. Meta's getting hit pretty hard, and Microsoft. Those two are kind of been dogs lately. Netflix, though, look at Netflix, trying to find a little bit of a bounce here. They've been a dog for a while. They lost half their value, which I was told could never happen to a Mag 7 stock. How could you say they're going to lose half their value? Because Microsoft almost has too? Because that's how the stock market works. And if you're just too young to remember those things, then learn your history. Amazon getting hit a little bit here, and then Tesla, Apple, and Google all kind of meh. But the big hits are on Meta, Microsoft, Amazon. Everything else is kind of treading water. Starting to see some hints of green. May get a gap close on the ES. See what happens there. The thing to keep an eye on, let's see where we're at. Down a little bit from the high today. The US 30-year continues to climb, and this is not going to be a good thing for the markets. It just isn't. They don't want it over 5, and when it is over 5, the markets will do what they can to push it down. It's persisted over 5 for quite a while now. And when the bonds market wants to be paid, that means they're assessing risk in the big markets. Papa Bear, how are options prices indicating? Is it indicating a potential sell-off? Let's see here. They're slightly elevated. I would not call them out of bounds or anything. Right now, about $1.30 to $1.50 at the money. Um, First strike in the money is about $1.70 to $2. Typically, right at the start of the day, you're going to be $1.15 or so, $1.20. So they're not what I would call out of bounds, but they are pricing in a little bit of a drop today. At some point in the day. Now, sometimes market makers are wrong, and that little bit of drop turns into a lot of bit of drop. But they usually price in volatility pretty well. So they're saying when they have it elevated slightly, which is what it is now, they're saying that at some point there can be a decent pullback today, like, for the ES, maybe 10, 20 points. But they're not looking at it as we're looking at a 30 to 50 point sell off from here. That's how they're viewing it. Now, of course, just like these guys are basically bookies, and just like anything else, if the conditions change, they will absolutely impose more volatility and more price in there, premium in there. Just like if you have a 3-point line on the Super Bowl and one of the starting quarterbacks blows out his knee in practice, that line may go to 7, right? Or go the other way. So they don't always know what's going to happen. They don't always know that a whale is going to come in and drop a $10 million sell order on them. But in general, they are pretty good at pricing in what they see. It is the job of the market maker who makes price. Well, he doesn't make price. It is the job of the options houses to create pricing that makes it as hard to make money as possible. Now remember the lesson on the 8 and the 21, that also applies to the 5-minute time frame and all charts. So on this chart you have the red line here, which is the 8. The blue line is the 21. In between them you have VWAP. They came down close to the 8 here and bounce away from it, but as long as they're above the 8, then the trend is up and everything's good. Now, when you want to start kind of betting, if you want, so you don't, let's say you don't get a signal from my indicators or you don't have them and you just want to know, they start closing below the blue. So below all three, you got to be below all three. In this case, it's the blue. They start closing 5-minute candles down here, 1 to be specific, and they don't recapture immediately. they're very, very likely to hit this number down here, the pre-market low. So if they close below at 746.39, you've got 2 points, over 2 points of drop that they're very, very likely to hit. Yesterday was a great case of that. If we go look at yesterday, let me see, we got anything going? Not yet. If we go look at yesterday really quickly. They closed here below all three. The next candle take us down, and then eventually they came down. This was the pre-market low, or right around the pre-market low. We got our sell signal right on that move, and that was from 745 down to 745.29 down to 744.17. So over a point of drop there, which on options is really nice. We actually got the sell up here somewhere, so it was a good move down for us. But they did hit the pre-market low after closing below those. But then you'll notice that once they hit that, they got back above them, came back, messed with them for a while, and then they used them as their baseline the whole rest of the way up. Came back, and then once they got the momentum going, they came into the 8, pushed higher, came into the 8, and then finally at the end of the day, kind of broke down a little bit. That's how you understand trends. Right now, they are in a strong uptrend, and they have gotten through the pre-market high. I wouldn't call this a back test yet. I mean, by the time price moves up, it may be close enough. But if they make a new high, then they're trying to start a trend day up. And that will hold as long as they're above this 8. They start getting below the 8, and then you can start to worry a little bit. But all pullbacks into these moving averages have the potential to be bought should they start a trend day setup. You can see again, as price moves up, your trailer stop moves up as well on the futures indicator. The sniper triggered along and I took it. When it exits the trade, should I be looking for a pivot point short? Not necessarily. I mean, that's not a bad idea. You know, if you stop out of the trade after it hits its targets, you know, your runner stops or whatever. It's not a bad idea to be looking for a short, but that's not exiting because it's expecting a short. It's exiting because all of its targets were fulfilled and the market can continue to keep going. You know, there are days when the market can go 100 points basically straight up on the ES. Those days are pretty rare, but they do happen. So I wouldn't necessarily be looking for a short. I mean, right now you have you have no red bars whatsoever, and the trend has held the 8 the whole way. So this is essentially now making a trend day setup. So on the daily chart, I would say if my first thought would be they're going to give an ABC like this and then fail. That would be my first thought. The only reason I go with that first, because the ES actually isn't terrible off of this low. The only reason I go with that first is because of the NASDAQ, and we did not fulfill a new low here to kind of complete this triangle a little better. So ES is certainly set up for higher if it wants to. Actually, let's look at the overnight action real quick since we don't have any red bars to trade off of. So we made a dual low right here. I don't think we fulfilled all of the fibs for it though. So double bottoms are annoying because you can count from here or here. You don't know which one's right. This one is super ugly, right? That one was definitely going to come back and tag this low here. So I'm going to count from here because the first move up was just awful. And you do have a 1, 2, 3, 4, 5 here. The 4 is not the best I've ever seen. And then you have a wave 2, but I don't think this fulfills the fibs. I don't think it's big enough. So I think they may have broken down and broken the structure. Let's see. Well, they made a lower low right here, so yes. So yeah, I would count this as a potential ABC up with a target of, now that's got to move. So this is your A and B. 75.85 would be the target for this and should be in a pretty straight line format. That happens to come into a few of these resistance areas. There's also this peak right here that is, oh no, that's the VWAP line. Look like a spike up. There is a fair amount of resistance in that zone, so we'll have to see how we do there. But they're coming into 75.50, which is the top of the bull pivot or bull bear line, if you will. So the bull bear line, I said if we looked at 75.33, we would see all the interaction. That is this line right here. So you see they came down to it here. They came down to it and got through it here. They came into it here, here, and here. They came into it here and failed it, here and failed it, here and failed it. They got above it here and went back below it. They came back to it here. So, and then if you come over here, there's even more. They came into it here, here, and here. So it's been a line, this kind of 75, 30, 75, 33 zone. That area has been a major point of contention, and it's kind of the bull bear line. But the top end of that is this area right here. Here it is, this ledge right here at 75.55, 75.50, where they came in many times here, came in over here, came in here, into that zone, and then came in here, and now they're coming back into it again. Getting through that should ignite a squeeze. Now that squeeze could take them to 75.85. That makes sense. And then we'll see what happens from there. But I would count this as an ABC off of this low. And I would count this overall as A, B. Yeah, I don't even like that. No, I would count this as its own low and this as its own low. I would count them separately. So it would just be this is the low, and this is a truncated fifth, and then this would be an ABC. But they are in heavy resistance right now, so if we are going to see a rejection or a failure, this is going to be the spot they fail from. In which case, this 4 is just a really ugly structure. It would be 4 of C down, so this would be a C and then a 4, actually we're in that triangle. This could be 4, 5, B. This could be B of the triangle. So this, remember, triangles are ABCs every wave, so this can be A, B, and then C down to complete the triangle. Seeing a little bit of weakness here on the charts, so we want to go back over and make sure we don't get a trade miss. have to reset up here. I doubt they're going to get it. Well, they got 60 cents there. We'll see. I'll look at 748 for now. I may change that to 747 for a put. I'm not sure they're going to get into trading territory before they eclipse 748, but they might. 748 is going to be right down here at the 8, if they even get down here. If this is a C wave up, they'll probably just push. And it's starting to look that way. Remember, we do have trend day up parameters right now in general. So you have a trend day, which is a break of the pre-market, or no, that's not true. The after hours high is up here. So we don't have a trend day yet. They did break the pre-market high, come back and test the 8, and now they've gotten through the after hours high. If they come back and test the 8 again and then make a new high, or any of these really, but if they back test and make a new high, then it is a trend day. How you define that is whichever's higher, the pre-market high or the after hours high. In this case, it's the after hours high. They have to get above that to start. Until they're above that, there's no chance of a trend day. Once they are above it, then you want to see them back test. So they get above it, they fail back down toward the moving averages. On the strongest of trend days, they're going to hold the 8 and come back up. And if they make a new high, wherever this high is, they can go higher here. Wherever this high ends up being, if they pull back and then make a new high, then you have a trend day up setup on your hands. And that plays out very often. I'd say probably 80% of the time that plays out, at least for a while. Maybe not the entire day. Maybe at the end of the day it gets weak and pulls back some. But you're set up for an early morning or first half of the day trend for sure. And as long as they stay above these moving averages, specifically the 8 is most important. The stronger, as long as they stay above the 8, the trend is strong. If they get below that, they can come down to the 21 and still keep the trend. But that's how you define a trend day up. Trend day down, same principle. You look for the after hours low, which I believe is right here. And then you look for the pre-market low, which is 74.28, so that's lower. They have to get below this, back test of moving averages, and then make a new low below wherever this low was, and that's your trend day down setup. And as long as they stay below the 8.21, then that is intact. We are seeing a little bit of weakness, not in bars, but in the underbelly of the market. I can see weakness in my stuff that I have. You guys don't have it. It's my own stuff. And the move up, in other words, it's moving up on weaker terms. That doesn't mean it's going to stop moving up. It can mean that the bears have given in, and that's just going to go and doesn't have to really work too hard to do it. But oftentimes that can mean they are looking for a potential to top. However, it may be that the bears have given in on this particular instance, especially given that we have kind of this trend day setup going. They are getting a little far from the 8 though, so we could see a reversion just to come back and check in. They never get too far away from that moving average. At least Sniper gave us a winning trade over here. It's still running. Obviously, it's moved up several levels. We haven't had anything on Pivot Point Pro because there's been no pivot. I mean, if you look, we had a buy warning. Oh, I see what happened. Gave us a fake buy. But there's been nothing to pivot in regular trading hours. So no signals on the Pivot Point Pro. If there's no pivot, there's no trades. And currently there's no pivot. They're at 75.55, trying to break out above that level. We're going to look for a failed breakout now. That's kind of the idea. We get a high above it, pull back, do this, and then do this. I don't know that that's going to happen, but we are seeing weakness in the underbelly, as I said, and they have kind of pushed above that high from yesterday. So let's see what we get here. We are at 748, so we should be okay with that. See if we get anything to trade. The ES is green and NQ is red. Is this messing up Pivot Point Pro's signals? No, no, it's when they're going in opposite directions. The NQ isn't going in opposite directions, it's going up. It's just red in price. So if the NQ was moving down and the ES was moving up, then yes, but they are both moving in the same direction. They're both, well, they were moving both up, now down. Now, it is possible that we get filtered here. What I mean by that is when you have a trend day setup plus a strong move like you had, so you have a very strong move up off of 745 to 749, so 4 points straight up on the SPY with no selling whatsoever, and you have a trend day potential. I don't know exactly if that filter is kicked in, but it will filter potential sells because they are likely to fail. The trend day is the most likely scenario, so we may or may not get the sell here. I don't know for sure. I'll let you know soon, though. Remember, these are 1 minute bars, so they seem like a lot, but really they're just 1 minute. The 5 minute bar is getting ready to close, but hasn't really done anything too crazy yet. As a general rule, the longer the push higher, the stronger the push higher, the longer it takes for a reversal signal to come in. So if you're wondering why we haven't gotten a reversal signal here, it's because we're looking for more confirmation in different ways. Because very often you get these one bar wonders that come down, and then the next bar rips it right back higher. So we have not gotten a sell signal yet because of that. Now they've broken out over the after hours high, and now they're back testing the after hours high. And so now the question's going to become, are they going to give a failed breakdown? So if they come down, they come back up, and then they fail back down, we could see them sell off a little bit here. But if they come up and make a new high, then that is essentially a trend day setup. Because this 8 will move up close enough to price. And you can see they got too far away from the 8. They came back into the neighborhood of it. They still may come back and tag it, but they came back down close enough that they got near it. And by the time price this moves up in time, it will be close enough to the low there. Well, by a starter position in the VIX, that might play out well for you. We'll see. The ES long did stop out there. You can see that the runner tells you where it got out, but you realize 0 points again because we took all the profit at take profit one. So that is a important thing to understand when you look at that. Joseph Rapp, welcome to the stream. On key levels, do you like to use pre-market or after-hours high predominantly? Both. I think they're both important, but whichever's okay. So we should be getting a sell here, and we're not, which tells me that the move up was too strong and the trend day setup filtered. So just as an FYI, this would normally, in the old style of Pivot Point Pro, have been a sell, but it deems it too high of a risk to fail, so you don't get the sell signal on the chart for this one. But if you're aggressive and want to take the sell, by all means, just know it has a high level of failure attached to it. That doesn't mean we can't pull back to VWAP or the 21 and hold and go higher. It just means that the overall move down does not have the characteristics necessary to have a high confidence that it will follow through, if that makes sense. So far, good entry. Thanks for your help. No problem. Hopefully that VIX entry plays out well. Are they going to try to trap the 8? They close below the 8 and the next bar doesn't take it back. VWAP is your likely target. Unless they get there now. They still have a minute and a half. If they close back above the 8, that's a pretty bad sign for the Bears. Remember, guys, the squeeze sniper on the left here is not production. It's not the production version. It's not the one if you have it that you have. So if you didn't see this trade, that's why. Um, it's one that I'm testing, and I need to make sure the bubbles pop up when they're supposed to, that nothing changes, that all of the things work the way they are intended. And so far, so good. We're watching several trades to try to make sure that happens. They did close back above the 8 over here, which is a bad sign for the Bears. Um, it doesn't necessarily mean they're going to run it straight back to the highs, but it is not in general, this is not a good look. The Bears wanted to close this below and continue. Getting back above and staying above is going to be a problem for the Bears. Now, if they fail, then so be it, but this close right here was not good for the Bears. And that's the reason we implemented those filters, because um, those longs or those shorts and longs and the when it's the opposite tend to fail quite often. VIX keeps falling since yesterday morning. Does this suggest a huge pullbacks may not be there? Um, Not necessarily. Um, Yesterday was a pretty bullish day, and today, has been bullish from the start, even though, and was green there for a minute, even though we're red right now. So I wouldn't say that it's necessarily forecasting that no big pullbacks are there yet. Remember, the VIX is kind of not an early adopter of the move, it's kind of late. It just tells you that volatility is rising or falling. And when price is moving up steadily, volatility is going to be falling. And when price is moving down strongly, volatility is going to be rising. But it tends to be late. So the VIX rises after the volatility starts to kick in and then suggests potentially more volatility, more than it does predict anything. Well, here come the Bears. Look at that. Nice pullback here from the Bears. Key area, if they close below this, very likely they are headed into the 744 area. So if you are a person that wants a trade, look for them to close below the 21. And as long as the next bar isn't a face ripper up, they're very likely to come down and hit the pre-market low. If there's a lot of ifs on that. Wait for the setup, guys. Don't try to front run this stuff. You'll get burned up, because it's if they don't close below it, they're very likely to bounce it back in the other direction very strongly. So um, remember, they can come all the way down here and still continue the trend higher. But if they do close a bar below the 21, I would expect a little bit of a bounce, maybe something like that, back to test the 8. But ultimately, as long as they don't just face rip it back up, I would expect them to come into the pre-market low. But I'll talk it through as it happens, if it happens. Again, a lot of ifs. I was about to say a tiny gap here, but they filled it. Already been filled. ADD does continue to fall. So that is something to keep an eye on. Options prices still not that elevated. They're at 123 or so at the money, which at this point in the day is slightly high, but not suggesting any kind of powerful selling. Thanks for the price action chat knowledge. That is why we are here. Well, I appreciate that. And yeah, when we're not trading, I try to give you as much as I can. So now they've tested and now they're below. So closing below now starts to look a little rough for the bulls. The bears let them close it back up here. More of a trap, it looks like. But closing below this twin set of moving averages will be much stronger for the bears. SMH has almost returned to flat. I'm guessing it was green a few minutes ago, most likely. So that is an interesting. I'm going to jump that chart over here real quick. Yeah, SMH found its low and pushed pretty hard into its resistance and rejected its pre-market high. So, or after hours high, I guess. So it has not broken out over its after hours high, rejecting that area so far. This is a pretty strong move back into that area, so this will be kind of a key time. This low right here becomes important at 580.73. If they get back below that, they do have support down here from VWAP and the 21, but I would expect them to at least come into that zone, if not break down. Thirty seconds left. Important close here for the market. Now what I would look for is, as long as they close above the low they just made, if they come back down and break that low, very likely they're coming down here. I wouldn't say in a straight line. I would say they're going to defend here generally. Traders hate to see their screens go from green to red. So today's low would likely get defended. Again, they can rip this back up and just keep going. But if they break this low right here, that starts to create problems for the bulls in the short term, for short-term 5-minute trading I'm talking about. This will be a key bar for the Bulls, or key couple bars, depending on how they handle it, I guess. Was 2025 July flat trading 2? Um, July tends to be bullish. I don't think so. I'd have to go look. Let's go look. Let's go to the daily. Let's see, May of 25. July right here. Nope, June. July 1st. First half of July was very flat, and then the second half of July was straight up, and then we got into August, and boom, and then back up. Now, midterm election years look a lot like this, August, but then you get September, October. That last year was kind of an anomaly. September and October tend to be bearish in nature seasonally. And last year was September was absolutely bullish. October gave you the one hit wonder and then ripped it again. And then you got the late November sell off. And then they ripped it higher into the end of the year before failing at the first of the year and into April. So the first half of July, yes. Second half of July, no. Not a good look for the Bears. They got to get back above the 8. And if they get back above the 8, then that starts to look a lot better for the Bears. If they reject the 8 and make a new low, well, that's certainly on the table here. You can see the battle here of the moving averages that both sides kind of understand. The Bears understand if they get it down, they can take it. The Bulls understand if they get it back up, they can run it. So this little area right here is going to be the battle zone for at least 24 more seconds, if not another 5-minute bar. This is starting to look like a potential failed breakdown of these moving averages, although that's not something I would personally trade. If they come up and hit VWAP, then it does look like a trap here that will move higher or move back higher. The reason for that, if you were wondering why I think that, you get a sweep of the moving averages. You get to move back above all the moving averages. They come back down but can't take out the low. And if they get back up and hit price, that tells you price wants to be up here and not down here. Now, I don't use that particular strategy on moving averages. I use it on major lows. So I can't tell you that that tested strategy is very powerful on moving averages, but it's very powerful on lows for failed breakdown trading. And it has a similar feel to that currently. Now, they haven't hit VWAP yet, so they're not fully there. They got to get back up to VWAP, and if they don't, then they break the low and go. But again, you can see how hard they're defending this area and not letting them drop it because they know that the breakdown here will go. Now it looks like they, oh, nope, not yet. By a few pennies, they held on for now. Few pennies in both directions. They couldn't quite get to here. They couldn't quite get to here. So now it's just a battle of who gets there first. And there they go. So now you have a break, a backtest break. Let's see if the bears can go ahead and follow through and close. That's now 3 closes below the 20, all the important moving averages here, but no follow through to the downside. If they go back up here, was yet no follow through yet to the downside. If they go back up here, this is an epic trap. In general, this price action leads you to the pre-market low. But again, they don't have to straight line that. It doesn't mean that they're just going to sell it in a straight line down to the pre-market low. Let's zoom out a little bit now that they've kind of run their course here. What's the low here? Okay, I see what they did. Let's see. 747.08. 747.08. Okay, so what is this low? 747.07. So that's the first actual break of the low. Yeah. ADD has now fallen to negative 100 and continues to fall. SMH still hovering around flat. They haven't given it up yet. The SPY is starting to give it up now, though. They ran one more back test up there and then lost it. They never make it just super easy. They never just say, hey, we ran the pattern, so it's going to come down here. They got to mess around with you a little bit before they do it. Are they waiting for earnings tonight or something with the messy market? I haven't even looked. I'm sure we have Mag 7 earnings this week. Let's look at see who's the earnings today. And the answer is probably. I mean, they don't. I can tell you, earnings are just the catalyst to do what they're already going to do. But boy, that's a weird one today. We've got Tesla, Google. Who else? Are those the two big ones for today? Just Tesla and Google. Just Tesla and Google. Tomorrow you have Intel. Um, Looks like Intel's the only big one for tomorrow. I'm sure there's semiconductor ones that I don't mess with or know about. You got IBM and stuff, some other Texas Instruments, some others in there. But Google and Tesla are the two big ones after hours today, it looks like. Unless I'm missing one. Somebody wants to enlighten me. Let's see what next week. Next week's got to be loaded up then. Let's see on Tuesday next week. Oh, there it is. Next Wednesday. Ooh, they always do this. Next Wednesday is the Fed, and then you got Microsoft and Meta as well as Robinhood, Qualcomm, and then Apple Thursday, Amazon Thursday. So next Wednesday and Thursday is a fair amount of them as well. Okay. I'm going to hang out here till the top of the hour. Since we haven't got anything brewing right now, we'll see if we get a long maybe on the futures. Um, Bulls pushing back up here. I would suspect that this push will get sold at some point. Again, anytime you have a failed breakout, usually go back to the bottom of the range, which is the pre-market low. So we'll see if that's going to be the case today. That happens more often than not. Again, that doesn't have to be a straight line sell down. They can bounce it and do all kinds of different things. They can chop it. They can do this. It may take them to the end of the day to get there. None of that has to happen immediately. It's just likely to happen. That's all. Well, there is an entry long for the futures sniper. Again, this is not the production version, so if you don't have it on your screen, that's why. But your take profit, if you want to enter, is 75.4350. And your stop is 75.29, FYI, on that. The SPY moving averages continue to be the battle zone here. They get above those, At least a little squeeze is likely to occur. Whether it's all the way back to the highs or not is obviously to be determined. Bears doing a good job defending though. They're not letting them get out. They've had one, two, three, four opportunities to get out to the upside, and the Bears have shut them down on each one of those. Which, if you're looking for the pre-market low, seems likely to be what the Bears want to do. So obviously they want to defend those zones. Here's another opportunity for the Bulls. Higher high, Bears defend. Thank you for all your education. Still have a lot to learn. Best. No problem. I think it's Rob. Could be Robe, but it's spelled Robe, obviously, but I think it might be Rob E. I appreciate that. Sent Unk Alert. I am Unk, but I don't know what Sent Unk Alert means. You have to give me little more background on that one. And welcome to the stream, Chicago. That's how it's spelled. That's probably because that's how they say it up there, Chicago. The Bears. Good defense from the Bears there. The Bears. That was some monsters of the Midway stuff. They had the run out and shut them down. Some pass interference on that. Had to take the penalty. NQ's lagging today, not helping the Bulls. Yeah, I mean, Meta and Microsoft are heavy. I mean, they're when SMH is slightly red, it was slightly green earlier, but when SMH isn't helping in either direction, and you've got a heavy Microsoft and Meta, it's really hard to bench press the market, especially and Amazon and Tesla, Tesla and Apple. I mean, you've got some heavy Mag Sevens in here that are weighing the market down. Semis are trying to help, but not enough. I mean, maybe some of the semiconductor stocks are doing okay, but the Mag 7 is still the Mag 7 because of their size. They are giant stocks, and their weight on the market is heavy. The Bears have had every opportunity to take this down and are starting to look like the struggle bus. It doesn't mean they can't fix it, but letting the Bulls get back above here again is going to likely lead to some upside action. Guys, if you want to get Squeeze Sniper, it is in the description of this video. That's the only place to get it. It's not on my website because it's still not where I want it to be. So you're getting a discount on it, and you're able to get it at $20 cheaper per month or $200 cheaper per year. You already get a 2-month discount on the yearly price plus $200 more off. It's a pretty awesome tool, and it's only getting better, and we continue to work on it and improve it. And like I said, it really helps you understand tough markets. Today was kind of a wishy-washy market. The Bulls failed to break out, then the Bears failed to break down, and now the Bulls are trying to break out again. So Squeeze Sniper helped solidify that by giving you this run up here, and now it looks like they're about to hit their target here. They just need a couple more points. 743.50, so 2 points, and they're there. Which happened to be the last breakdown point. Shocking how that works. Basically, this month's open is the line. Watching the Bears is like watching Charlie Brown trying to kick the football and Lucy keeps pulling it away. Yeah. Growing up in Cincinnati, I would say it's worse here. At least you guys have a Super Bowl and have an iconic defense, an iconic coach, and iconic players. The Bengals have. I'm out. I got nothing. No Super Bowls. I mean, who's our iconic player? Ken Anderson, Boomer Esiason, Chris Collinsworth. Cool. Anthony Munoz is probably our best guy ever. He was obviously the best offensive tackle I think ever in football. But all right, there's a winner on the sniper. Always take profit, even if the bubble, because the bubble will take a second to appear. Always have your stuff ready to go. Again, this is an aggressive mode, so we take all of our profit at take profit 1. So total points was 850, total realized is 850. When you are in standard mode, you take, and you can adjust this. You can change this from 75 to whatever you want it to be, but we have found that 100% at take profit 1 is the way to go here. They're better than the Cleveland Browns. Well, I guess, but you're a friend of Munoz? That's cool. He's a nice guy. So is him and Max Montoya were great guys. Montoya's restaurant was here for a while. I don't know. I don't think it still is, but he was a very nice guy. I liked Anthony. I say that like I know. I say that like I know him so well. We can say we're better than the Cleveland Browns. The problem I have with that is you guys have Jim Brown, like one of the most iconic, if not one of the best, if not the best running back ever. He was definitely the best big type running back ever. I still am partial to Bo Jackson and Barry Sanders, but Jim Brown was a stud. I mean, having a tackle as your best player ever is kind of weak. I mean, if I think about the Super Bowl team that I was old enough to, this last Super Bowl team, Jamar Chase and those guys are pretty good, but um, I've I stopped being a Bengals fan a long time ago because I just couldn't stand it. Uh, but if I think back to that Super Bowl team, I'm like, man, who was our good defensive players? I'm like, uh, Isaac Curtis. I don't know. Well, we had to have a good quarterback, Boomer Esiason. Well, we had to have some big time receivers, Chris Collinsworth. Yeah. I mean, I don't know what I don't know. The irony of that is if I forget who dropped the interception in the Super Bowl. If he catches that ball, we beat Joe Montana and win that Super Bowl. The very next play, they hit Taylor on the crossing route for the touchdown. The Buckeyes kind of weak. Yeah, that's why Ohio State has such a rabid following because the pro teams are so bad that you have to latch on to something. And I guess that's Ohio State, which is they're the worst kind of fans most of the time. But I'm a Kentucky fan, and Kentucky's got monster idiot fans too. So you played with Munoz at USC? That's awesome. That's really cool. Was USC cheating back then too? Everybody cheats now, so it doesn't even matter. They should give USC all their stuff back. Their Heisman, they should give Reggie Bush the Heisman back because all he did was take money to play football, and that's what everybody does now, and everybody was already doing. Yes. Everybody acts like Kentucky's the only basketball school that's ever cheated, and USC and Alabama. Well, Alabama never, I guess, got fully caught, but you can't tell me that those are the only schools cheating. That Duke is clean and Kansas is clean in basketball and Alabama and Georgia and all these schools are clean in football. Like not not selling it here. Former trucker crossed the bridge up the hill to Florence, y'all, Kentucky. Yeah, yeah, that was the story behind that's really stupid, but Florence, y'all. Uh, they put Florence Mall on that water tower, and then the mall was like, "Hey, we didn't say you could do that." Which now malls are obsolete anyway, but they were like, "Oh," so then they had to change it to something. They didn't want to repaint the whole thing, so they just made it Florence, y'all. Reggie Bush clean as a whistle. I don't know if he was clean as a whistle, but he deserved the Heisman. The man was a insane running back in college. Not terrible in the pros, not great, but not terrible. But in college, he did some things that were just silly. That's the thing about I played against Sean Alexander, and you just don't understand how good those guys are against non-pro athletes. Sean Alexander would just look at people and be like, "All right, see ya." I mean, he was so fast. He was. I don't know if anybody knows how fast he was. A guy uh, who helped train with him, he got invited to Camp Michigan, which is like their elite football camp that their big 5-star prospects and everybody important goes to, and then they do a 40-yard dash contest where they run heats, and then the fastest guys get to run in the final heat. And the guy who went with him was talking about it, and he said, he barely warmed up for it. He just went out and he won every race by like a step, and then it got to the final heat where he had to compete against all the other fastest guys, and the guy said, Sean, are you gonna warm up? Or are you gonna get ready? He's like, no, I'm good. And he goes, I swear I don't know how fast he ever is because he just runs a step faster than the guy next to him. He just runs as fast as he needs to. And that was never more evident than as a true freshman, he went down and he was playing at Alabama. And 3 different times against LSU, he broke out. 3 different times the LSU cornerbacks had angles on him, and those are fast players. And he just looked over and ran just as fast as he needed to and never got caught. He was a crazy athlete, but you just don't understand how good those guys are against non-pro athletes. Even in college, when everybody's recruited to play at the highest level of college, Reggie Bush made those guys look silly all the time. And then you get to the pros, and they even out a little bit because everybody's a pro. But they are so... When people tell me this guy's a pro basketball player, and I watch him play, and I'm like, he can barely beat this game, man. He ain't a pro basketball player. He's going to be lucky if he's a college basketball player. It's crazy. When you see a pro athlete, I've seen a lot of them. I coached AAU basketball and stuff, and when there's a pro on the floor, it's a different thing. Well, it looks like the Bulls ran a trap down here, spiked below it, got back above it. More often than not, this will resolve down here to the pre-market low, but it does not appear that way here. But Sniper knew that. Sniper was all over it. All right, guys, I guess the Wednesday curse is not broken, but certainly set to the side today. We had 1 trade. It was a winner. Actually, technically 2, but you guys didn't get to see that one because I was blabbing about other stuff. But this version of Sniper I hope to have out this weekend. Of course, we'll keep working on it to get other things involved. It's not perfect. It doesn't short the market yet. Shorting the market is much harder than longing the market. It's much easier to find lows than highs. So it's easier to develop that code. So we're still working on that. The other version of Sniper does offer the shorts. If you want to continue to use that, it also, we need to get it fully dialed in on stocks and ETFs, and we're not there yet also. So it does have some things we're going to add to it and make it even better. Again, you're getting it at a discount right now because it is not fully baked. If you want to check it out, get it in the description below. This does look like if they can come and take out this high, that this will be a trend day to the upside overall. While they didn't exactly hold these, they didn't exactly fail them either, and you defer to the trend. So taking out this high would lead us into a likely trend day for the rest of the day. Again, guys, trend days don't mean that they do this. You got to understand what a trend day is. They don't just do this. They very often do this. But they just grind higher off the moving averages consistently. And given the depth of the moving averages, they can easily do this kind of trend, which is still a trend day. It's just sloppy, and that's been the market lately. So don't get all wrapped up in crazy things. They said take profit too if you were interested in that, which was a 16-point run up. There is a more aggressive way to play this. Like I said, it lowers your winning percentage by a fair amount, but it also raises the amount of points you win. So you just have to deal with the volatility. But if you put 100% at take profit 2, it hits take profit 2 a fair amount of the time, but all of the take profit 1 failures now become losses instead of wins. So it's, I think it lowers it to like 52%. But you're allowed to change that to anything you want. You can play with it. And, for us, the volatility win balance at 100% on the take profit 1 was better than win runners as well as take profit 2. So that was what worked for me as a trader. But you can do anything you want with it. Does Sniper work on Thinkorswim? Alan, no, and that's really annoying because Thinkorswim does not protect code. So if I put it on Thinkorswim, somebody can just take it and sell it, take it and hand it out, take it and give it to whoever they want. And I just can't do that. I've put in a lot of time and money and energy into building this, and I want you guys to have it. You're going to make way more than I sell it for, that's for sure. But I also have to recoup my time and energy and effort as well. So they don't protect code on Thinkorswim, but you can do what I do. I have Thinkorswim on one screen, I have this on another screen, and I just trade through that and do it that way. Or I also use Tradeovate when I'm doing my prop count stuff. So you can do that as well. Joe Rapp says hit the like button, and he's right. Please hit that like, share, subscribe button, guys. If you want to be part of this community, come aboard. Helps me get the word out, helps traders get better. We want to beat the man. The man is the market. I want you guys to have money, not the billionaires who are screwing everybody over at every turn they can and doing stuff to kids and everything else the billionaires are. I'm not here to tell you you shouldn't make as much money as you can and do it, but don't be a billionaire asshole. Don't be a guy that breaks the law and thinks he's above everything. Don't do those things. If you make a lot of money, just help the community and do nice things. But I want you guys to make a lot of money, and I want to take the billionaires down, or at least give you guys the edge you need to not get run over by them so they don't take your money. So if you want to be part of this community, I'd love to have you. I love that you guys are here every week. Thank you guys very much. We will be back this afternoon for the close at 3:55 p.m. We do that every Monday through Thursday, and we'll be back next Wednesday to live trade again. Trillionaire is above the law? Sure, why not? They all are. Congress is above the law. Everybody's above the law. I think that's been exposed in the last 6 to 12 months, that we can show all the people who broke the law in the most heinous way and never do anything about it. All right, guys. Have a wonderful rest of your day or week. If I don't see you again till next week, appreciate you guys being here. Hit like, please. Takes 2 seconds. Helps me out a lot. Subscribe if you haven't already so you don't miss these. And I'll see you this afternoon. Thanks, everybody.